Markets are on the move as rate cut hopes rise and energy giants shake up the sector. Shell entering talks to acquire BP, according to the Wall Street Journal. Trump signalling, well, no new nuke deal with Iran and keeping oil flows and investors' nerves rather steady for more. Let's head to Melbourne. We're joined by Jesse Moores from Spadium Capital. Jesse, always good to talk. Talk to us about what's fueling all of this market optimism, because over the weekend it looked pretty tough out there.
Yeah, well, it was market optimism in the oil markets, or energy markets rather, up until about a couple of minutes ago when I just had a look. So Shell and BP are now both down about 1% on the back of both parties saying that it's pure conjecture, it's market speculation, there is no talks of a merger. Obviously, a lot of what we've seen at the start of this week and moving into probably the later part of where we are now was this optimism around a deal being brokered of the ceasefire between Iran and Israel. I think one of the most interesting parts out of what we've seen over the last day and a half, particularly, was seeing a rather rattled Donald Trump, very uncharacteristic. Now, we know he has an abrasive personality, a very sort of forthright approach, a no BS approach, if you want to put it that way, from an Australian context. But for him to show that level of emotion and swear in that regard shows you that there's clearly some happening, or some murmurings rather, in this brokered ceasefire deal between Iran and Israel that has rattled him a bit and probably thrown a bit of his tariff plans into disrepute. And as you rightly point out at the onset, what it means for rate cuts more broadly.
Yeah, very much so. And been interesting this week also hearing from the Fed chair talking about the uncertainties brought on by the Trump tariffs, leading to questions about whether there'll be rate cuts too, essentially a wait-and-see approach.
And I think that's what we've come to get used to with Donald Trump, right? He likes to promote this idea of the illusion of control, that he's got it all under control. These tariffs have a purpose because I'm going to be able to do X, Y, Z for the American people. When you have, well, you plural being himself, when he then goes and promotes to the global economy that I've brokered this ceasefire, it's all fine. Don't worry about oil and energy markets. We'll be fine in Qatar and Saudi Arabia. There'll be no inflationary pressure from that then cascades through the US. Even if it has a significant spike in inflation in the US and the Fed is pushed to cut, we all know that cuts take about 9 months to fully get priced into the market sentiment and especially at the consumer level. So even if the Fed was to come in and start aggressively cutting, it then throws into disrepute his plans around tariffs and his bargaining power that he might have thought, or the illusion that he thought he had in that regard. So it's completely thrown a cat amongst the pigeons. And the fact that we've seen the US and the Bank of England sit tight, very much, as you said, the wait and see approach. But then you've seen the Swiss and the Norwegians cut to manage their own impacts from tariffs. You've seen the franc has gone ballistic in the Swiss. And the Norwegians, rather in Switzerland, and the Norwegians obviously made their cut to withstand the weight of the tariff impact.
Yeah,
it's just thrown everything into disrepute again.
I want to talk about Shell and BP. You touched on it there. The Wall Street Journal report that they are looking for a merger, or Shell is looking to buy BP. I mean, these are two essentially British companies that's much smaller than Exxon, much smaller than Exxon. What do you think of it? Do you think it's likely to happen? It's not often we talk about such massive companies talking about joining forces, but would it create a British champion?
Well, look, I think there's a realistic chance that this actually can go through. So let's take a look at the competitive market. You've got ExxonMobil and Chevron, which effectively dominate oil and energy markets, right? They're the two major players. They've got effectively a duopoly on global markets. You've got Shell, who's a $200 billion player, and you've got BP, who's a $200 billion player. BP have obviously had a number of executive management shakeups of late, which has thrown a little bit of concern around the vision for that firm. And then they've also had a number of failed projects, a big transition towards renewable energies. That seems to have fallen flat with shareholders, and they haven't been able to hit the ROI that they anticipated. You then look at the market data. Shell obviously announced a multi-billion-dollar share buyback back in May, literally last month. So if I was a bit of a speculative gambling man, which I'm not, Aaron, just to be clear, but that would indicate that if you're trying to buy back a significant portion of your shares to obviously exert more control as to the direction of your firm, I would have thought there's probably some merit to the rumour mill.
Yeah, definitely one to watch there. Both companies being pretty cautious about saying anything, but as you say, markets generally know what's going on, and the prices of both companies is down a little bit, which is an interesting point in itself. Let's talk about some of those comments. We'll go back to the Fed chair and what impact that could be having on the RBA in Australia as well, because it's pretty tight out there. We're hearing about mortgage repayments getting tougher for people to meet in Australia as well. What do you expect the RBA to do over the coming months?
Oh, I love this question, Aaron, because you and I have a good chat about this both online and offline. I dare say the RBA are going to sit tight as they always do. It's the old analogy or the old phrase, when the US coughs, we get the flu. I don't think that the RBA will be motivated to do anything anytime soon. It'll be very much a wait and see what happens in the US, what happens with this ceasefire, what happens to energy markets more broadly. I mean, going back to the Donald Trump saga, if you want to put it that way, politely, of course, him coming out and claiming significantly reduced the uranium treatment capabilities of Iran for the foreseeable future, and then you had other independent reports come out and say, well, at best, that's delayed them a month. So I think there's still a lot of geopolitical risk there to be played out before the RBA even considers it looking at cutting rates. But I completely agree with what you're saying around the tightness of mortgage rates as well. We're looking at prime mortgages starting to face significant delinquencies. Now, we know the big four banks, given they're backed by the Australian federal government, there's no chance that they'll collapse. But we know that they're not in the market of pushing people out of their homes. But the question will start to be priced into these big four bank stocks. At what point do they start to release quarterly results and say, look, we just can't afford to take on the number of delinquencies or the the capitalisation of interest repayments for 6-12 months ahead as much as we have been.
I mean,
so the pressure will start
right?
to come.
Like we talk about data, that's pretty good data for the RBA to realise that things
100%.
are tough. But yeah, we've got to leave it there, Jesse. Always appreciate your time. Thank you so much, and for telling people about our DMs.
Thanks, Aaron. Always a pleasure.